Remember when I told you about CTKB stock on November 14th? Well, that stock rallied an entire 24% in just 2 trading days. Now, I'm not promising that will happen with today's stock, but what I'm about to show you could be one of the most overlooked turnaround opportunities in the stock market right now. We're talking about a company trading at just $2.45 per share, with analysts, the sheep of Wall Street, predicting it could go to $4, which would in itself be a 63% gain. And the insiders, they're buying like crazy while everyone else is ignoring it. So my promise to you is that by the end of this video, you'll understand why this beaten down retail stock might be setting up for a major comeback, and why the smart money is quietly accumulating shares right now. My name is Felix Prehn. I'm an ex-investor banker. That's Winston back there. You know the research for this. I've seen how this market operates. I'm also the founder of the Goat Academy, where I've helped over 20,000 students learn to invest smarter. I'm also the co-founder of TradeVision.io, where we track what the smart money is actually doing, where we give you the news that Wall Street gets at the same time. And my entire retirement planning here is about spending my time sharing with regular investors like yourself how to spot opportunities before Wall Street catches on. And I'm going to show you today a stock that most people have written off or never heard about. But the data tells a very different story. This could either be a value trap or a massive opportunity. Let's find out which one it is. But before we do, I want to be very transparent with you here. I do not own any shares in this stock, and yes, it is Vera Bradley. VRA is the ticker symbol. I intend to buy this stock at a certain price, and I'll explain to you why in a moment. I may then sell those shares at any moment, and I may not tell you about it. I don't have to. I have not been paid by VRA or anybody else. I never receive or accept payment from anybody that we talk about. So this is not financial advice. I'm not your financial advisor. I am not a financial advisor. So do your own research before making any investment decisions. Don't be a lemming. Okay, so we got that out of the way. So what is Vera Bradley? VRA is the ticker. Now you might know the name. They make women's handbags, and I know my audience is about 93% male, so you're probably going, Felix, women's handbags. Well, they also make luggage and travel accessories, apparently with sort of odd flowery patterns on them. Quilted fabrics, in fact, the sort of thing maybe your mum or sister might like. So these guys have been around since 1982. Not a fly-by-night operation. They're based in Indiana, and they operate 3 main businesses. And it's important to understand what a business does if you want to invest in it. If you're just somebody who wants a stock tip, please go away. There's a door here somewhere. What do? Direct sales. They have their own stores. They have their own websites. They sell in department stores, specialty retailers, and they used to have something called Pura Vida, but they sold that business to focus on their core brand. And here's where it gets interesting. The stock's currently trading at just $2.45. That's down about, well, 53% over the last year. And if I zoom out onto a bigger chart, the buy and hold crowd will get something to laugh about here. So this thing was trading at the top and it's now down about 94%. Maybe a bit more than that, 94, 95% off the charts. So buy and hold, they say. But there is something very interesting here. Even within the misery, it has these tremendous run-ups, 150, 170% run-ups, and it does these again and again and again. And that's what I'm aiming to capture. I'm not aiming to hold this thing till death do us part. Quilts, yuck. So this is a small cap stock with a market cap of about $68 million. That is tiny in the world of retail. But small caps can move very fast when things turn around. I mean, I look at this, I'm thinking there are some traders or some hedge funds who are really enjoying themselves on the up and the down here, because this is, to me, not a normal pattern, right? We see the same thing again and again and again. So when I see something like this, I think, well, maybe we could partake in this little rally if it comes, when it comes. Now, why now? Why this? Well, look, before we talk about project restoration, the industry is something we need to always understand, because even the best company in the world can struggle in a dying industry. But right now, apparels, handbags are not dying. In fact, it's growing faster than most people realize. The handbag market is worth about 56 billion. It's expected to double almost to about 100 billion over the next 5 or 6 years. So you have growth there, more growth than the average market, by the way. So why then Vera Bradley specifically? Is it the quilts with the funny florals? No, they've been struggling. Their revenue dropped from 500 million to about 470 million over the last 2 years. It's dropping even more this year, by the way. And the stock's been crushed, right? But here's what people are missing. It is in the middle of a massive transformation called here, Project Restoration. And it isn't a marketing gimmick. It is an actual overhaul of that business. I forgot to put on my smart yellow glasses, which make me see winners faster. Now, these protect the eyes from all the bright lights, which is important. Now, what are they doing? Well, there are a couple of pillars to this. First is they're refocusing on their core customer audience, women aged 35 to 54. If there are any of you on this channel, let me know. And they're looking to elevate the brand. Now, that's always a difficult thing to do. So I'm not saying that's necessarily going to pay off, but celebrity partnerships. They've hired somebody called Melinda Paré. I don't know who that is, but apparently she's good. And they've brought in some fresh creative vision through this Melinda lady. And they're also updating their product line to be more modern florals maybe. Anyway, apparently they're updating, the whole thing while keeping the distinctive Vera Bradley style. They're also expanding into beaded bags and leather bags, yuck. And they're bringing back some of their heritage products, the stuff their customers actually loved. So at the same time, they've opened new full-line stores. There are 3 for this year. And they're updating the existing stores, closing the underperforming one, which is probably likely to have the best outcome. And they partnered with the Radio City Rockettes for the holidays. Again, apologies, I don't know who they are, but apparently it's a big deal. And apparently it gets them in front of the kind of customers they want, women 35 to 54 who like floral quilts. And it's good, you like floral quilts, there's something for everybody out there, right? Winston would probably like one. Winston, do you like a floral quilt for Christmas, for the winter? It does get a bit chilly over the winter. Now, essentially, they're getting leaner. They've sold off the stuff that wasn't working, and they are serious. They're really focusing on getting this to turn round. Now, here's the stuff that's in progress and that's been happening. So quick summary for you there. Now, what we care about as cold-hearted investors is, of course, the money. But before I tell you about the money, if you are a cold-hearted investor or you're just serious about your portfolio and you want to learn the strategies like this one from my mentors, my Wall Street mentors, seriously, that's where I learned the stuff from. I want to invite you to book a free strategy call with us. And you can do that, and you could then potentially also lock in our crazy Black Friday sale offer, which I'll tell you more about. How do you do that? You go to felixfriends.org/freedom. felixfriends.org/freedom. The link is down below. And we'll talk about your investing goals, how to spot opportunities better, and so on, and whether mentoring is the thing that might get you there. In my humble opinion, it is what gets everybody there. But leave it up to you. Link down below. So let's talk about money. Right? These guys have achieved something. Cost reductions, which is always a good thing. They have 0 debt. They have cash. And we expect by next year that cash amount is going to go up about $10 million. Now, this is a teeny tiny business, so this is quite a lot of money. So I like a cash trend like this, right? Means very little bankruptcy risk, right? Because they're actually making money. They seem quite flexible, and they've managed to weather a horrible downturn, but they can also invest because they actually have some money. So last year, they actually made a profit, which is impressive. Now this year, we expect that to be a great big loss, but that is a transformation investment. It's a one-time restructuring cost. Underneath it, the business actually looks quite good. So this is a strategic move, but of course, most people don't understand it, so they just see the number and they go, I don't want to be in this stock. Inventory is down, that's smart, means they're managing their cash better, and I expect profitability to be back in 2026 once these write-offs are basically done. Margins are very good, by the way. Apparently floral quilts are sort of an AI type business. But the most important thing for me always is understanding that. But then we need to look at where is the money going. And how do we do that? We use a tool that I'm a co-founder of. It's called Trade Vision. And we've been developing this for some years because I wanted to have access to the same kind of data that we'd have access to if we were all working in a bank, which we don't. And my bank used to spend, I don't know, $100,000 a year or something on my data subscriptions. This year is $19 a month because we want to make this available to everybody. But there are a couple of things in here that we look at. And let me walk you through them with a pen. Now, if you have no interest in learning anything, then you're probably not here anymore, so I'm going to ignore you. But take some notes is what I would suggest. Couple of things we look up. So at the bottom here, down there, you have an indicator which is called MRSI. You're not going to find that anywhere else for some strange reason, but it's the most useful thing that traders use in Wall Street and have been using for 50 years. And what does that tell you? It tells you, is this stock better than its industry? So in a nutshell, it's telling you, is it a gold star? Is it a hidden gem within the apparel industry, which is, we bought some Victoria's Secret earlier in the year. We should have bought Ralph Lauren and things like that, right? Those kind of businesses. And you want that trend to be going up at the very minimum. That's kind of the key thing here, right? And then when it starts petering off, it's a warning sign. So for example, here it's trending up down there, flattens out. Well, that's your sign to, run for the exits. Obviously, not financial advice. You got to come to your own conclusion. But that's the first thing I look at here. And I see a very healthy trend, right? Going up very nicely here down there on my MRSI. The second thing that I look up, maybe it's actually even the first thing that I look up, is the yellow line that we have here. That yellow line is the 50-day moving average line, SMA, 50-day moving average line. And that bottomed out about here. It's going a bit sideways and it's starting to peak up. That's the pattern we look for. And if you look at that here, falling knife, bottoms out, moves up, yay, right? And then we had a pretty nice rally. And that's kind of the way I see this thing right now. But, and here is a warning, a big, 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 beautiful warning. I am not buying the stock at this current price point of $259, and I'll tell you why. There is a top here, a top there, and a top there. And the more conservative strategy, in my humble experience, is that we want to be above these highs. And that's about $2.84, call it $2.85. So I am interested to buy at $2.85 or slightly above it. I am not interested to buy any below because there's a fairly good high likelihood we're going to do this and we're going to do that and we're going to do this and we're going to do that, and it'll just do absolutely bugger all. But if we do break through this, then there'll be quilts for everybody for Christmas, right? Winston will be wrapped in one if this one goes the way we expect to. We should actually do that. It'd be funny, wouldn't it? So that's what we're looking at here. Earnings are coming up in December. That could give us a little bit more visibility on the restructuring plan, which is a good thing. Last earnings were, well, people got excited going into it and then disappointed going out of it. But to me, this is a tradable pattern. And if you just see this thing recovering, all the write-offs are done, store closures are done, and them actually returning to profitability, even a moderate, and let me just zoom out for you here, where this thing came from, hard to get it on the screen, it's literally up there. But even a moderate recovery could potentially give us, some pretty significant gains, which is what I'm looking at here. Now, will I have a stop on this? Yes. Will I have risk management on this? Yes. Is my position sizing smart? Yes. All of that is stuff you need to learn from somebody who will teach it to you, because it's always personal. It's always personal. Money is personal. Your life situation is personal. So have a chat with us, book a free call, see if mentoring with my Wall Street mentors, guys who've done this for 20, 30, 40, 50 years for big investment banks like Goldman's and Deutsche and Bear Stearns and so on. If that's right for you, brilliant. If not, you'll also walk away with a ton of knowledge and more clarity. So there's a link down below, felixfriends.org/freedom. But here is another bullish signal for you. Insiders are buying this. Now, when I say insiders, I mean the people who know this company better than anybody. In June 2025, 2 directors of this quilt-loving business made significant purchases. We have Andrew Meslow is a director. He bought shares for $475,000. There it is. CEO. Ian Brickley bought shares for about $100,000. Another director. So together, that is literally $574,000 people's own money in just one quarter. And we have 0 insider sales in the past year. 0 sales. Insiders are buying, not selling. What does this tell me? Well, insiders, and this is another thing I love about these guys, insiders own 29% of the company. So they have a lot of their own wealth invested in this. Right? So when insiders put their own money on the line, they believe in its future. They see the transformation happening from the inside. They know things are about to turn around. At least that's my deduction. So these purchases happened at prices between $1.86 and $2.45. So they bought around better here up to literally here. That was their zone of buying. Now we're here, right? Analysts, and they're usually late, are saying it may go to $4. So the insiders are making money on their investment, yet they're still not selling. They're holding for bigger gains. And to me, insider buying is one of the most reliable bullish signals in investment. It's not perfect, but it is a strong indicator, especially when you see multiple insiders buy and nobody's selling. Wall Street, well, we don't get a ton of analysts on a stock this small, but we've got one. So let's have a look at it. And the price target here is $4. So 63% upside, hold, accumulate. That's a pretty big win in itself, right? But most of Wall Street, most investors are waiting for more proof that this turnaround is happening. And by the way, if you want to get a little bit of a valuation idea, price to book, which means the stock price compared to its asset value, is 0.38. It's trading below its asset value, right? Its competitors, its peers, trade at about 1.5 to 3x. So you can see why a very large, maybe 5x is entirely possible. I'm promising it to you. I'm just saying it's possible. Right? Retail average has a price to book of 2. Right? What is 2 divided by 0.38? Well, it's a 5x right there. So this could be significantly undervalued. Now, is there risk? Yes. The restoration project could fail, could take longer than expected. The CEO could leave, although you just bought shares, right? The leadership here is crucial. Again, they have money in it, so, you know, all of that. But yeah, there is risk here, right? Small caps are more risky. Little businesses are more risky. Small caps overall are more volatile. It's more liquidity risk, right? This could go up 10 or 20% in a day. It's a pretty competitive environment. You have companies like Coach and MK making bags that are pretty average, but, you know, again, competing. You have online, you have Amazon, you know, fast fashion, Zara, all these guys, they make it harder to make money in this business. And there could be a massive recession or women could just say, no more handbags, no more flowers, no more quilts. It's entirely possible, right? So there are risks. You need to be aware of these risks. I know I make light of them, but it's true. Revenue is declining. Now they're selling stuff off or they have sold stuff off. So revenue is not really a measure that I personally care much about unless you're a growth company. I care about profitability. But again, these are risks you want to be aware of. But my bull case here is very, very simple. The restoration project seems to be working. Winston is excited about this one, aren't you? Winston, are you excited about this stock? Well, you did sniff it out. Balance sheet is strong. Insiders are buying. There is upside from the analyst sheeple. They are saving money. It's a small cap. So the upside is potentially bigger, therefore also the downside. They are on a path to profitability. Just all those write-offs are getting in the way. It's really beaten down. I mean, it's like minus 94% from all-time highs. And management is executing, in my humble opinion. They're putting their own money on the line. So there's a lot of stuff here that I like. Now, these kind of positions, these kind of stocks are speculative, right? It is not a safe dividend-paying blue chip, right? Never invest money you can't afford to lose. But with high risk, potentially comes high reward. How do you deal with a thing like that? Well, you make it a teeny tiny part of a portfolio. And I'm not telling you to buy this. I'm actually telling you don't buy it, because you've got to make your own research. You've got to come to your own conclusion, right? This is your decision. So if you make it small, say you have a 50K portfolio, you put $500 into it or $1,500 into it. Now, what happens if that goes up 5x? Well, then say the 1% position becomes 5%. That's now meaningful, right? Or your 3% becomes 15%. That's now very meaningful. We don't make all of our money with one stock. That's a terrible plan, right? You want to have an entry strategy. I gave you mine. You've got to have an exit strategy, some sort of exit. 10% down might be a little tight because this is a big mover, but actually that's another entry strategy on the pullback. I'm not a huge fan of this, to be honest with you. On something like this, I would not personally do it. But yeah, you got to have a stop on this. You got to have a stop on every single position. Again, something we teach. I think it's something you want to learn from a mentor. Book a free call with us if you like, felixprehn.org/freedom. And you got to watch out for the earnings report. That is critical. That could be a good thing, right? We could see stable revenue. We could say same store sales growth. We could say, milestones are hit on the restoration project. But it could, of course, also go horribly wrong. And that's the risk with every single stock. So to me, this is the summary. It is speculative. I like it. I only like it if it goes above that price point that I mentioned earlier. And I see significant upside here. But you've got to come to your own conclusion. And once you are confident with your decisions and you have rules and you have someone you can rely on and ask to make sure your decisions are on path with those rules, I think life becomes a lot better. At least it has for me. So if you want to take advantage of this crazy Black Friday bonanza we've got going on right now, book a free call with us. Let us walk you through what mentoring with us looks like, live one-on-one calls with my mentors and so on. Go to felixprehn.org/freedom. Book yourself a call. The link is down below. And if you got some value on this, what else can you do with this video? You could share it with a friend. Yes. I wish you all the best, as does Winston. Take care. Hidden power players are gambling with your retirement. And they're profiting massively from a risk that almost nobody is talking about. We're talking index funds, SPY, VOO,